Do you actually depend on one source of investment? Idea without vision is useless. Think about long-term investment this way. While you're sleeping, your money should be able to work for you. Hello guys, welcome back again. This is Chukwuemeka, your investment advisor. Today we'll be talking about common investment mistakes and how to avoid them. This is one topic that most of my guys have actually talked about. Oh, Chuka, what are the investment mistakes that people make? How can we avoid them? What's your advice? And I said, I'll try to come up with something. What we do in Investment Talk with Chuka is based on our knowledge and our market exposure, we try to guide our viewers, but at the same time, we do not persuade people to invest in a particular kind of business, right? So we just give you our opinion and then you make your informed decision, just as we always say. So what are these investment mistakes and how can you avoid them? Number one, investing without clear goal. I think it was my last 2-3 videos where we talked about direction, right? Strategy. So goal is what you want, your view, your vision. Idea without vision is useless. An idea with vision is gold. That is direction, right? So for you to want to invest, you must have a strategy. There must be something in that business you want to invest in. Let me digress a little bit. I mentioned about knowing the business you want to get involved in. You must understand the business you want to get involved in. You don't want to go into any business that you don't have any idea what it's all about. So if you understand the business you want to get in, which means that you have a direction, which means you have a goal, right? So what are your strategies? What are your goals? You want to get into a manufacturing business. What are you manufacturing? Is it pure water? Is it an automobile? Is it generator set? Whatever it is you want to manufacture, there must be a strategy, right? So Innocent woke up one day and decided to invest in Innocent Motors. Why? Because he wanted to build a Nigerian-made vehicle. That is his goal, right? And so he has pursued that over time. So you must have your strategy. You must have your goal. Do you want to get into bread making factory? Why do you want to get into bread making factory? What are your strategies? I will just give you some things that you need to work on before you get into any business. Number one, you want to go into a bread making factory. First of all, you need to look at the environment. When you look at the environment, you have to dissect it to this environment. Is it low class, medium class, or high class environment, right? Now, what is obtainable in this environment? Do people like bread? What kind of bread do they like? Do they like wheat bread? Do they like normal bread? Right? These are strategies. Okay, so what do you intend to gain in terms of market shares, right? So in the next 6 months, 1 year, 3 years, 5 years, what do you intend to achieve? What are your strategies? What are your goals? These are the things that you need to put in place. What are the cost parameters? If you want to set up an industry, bread industry, for example, you will need electricity, right? Because of the machine. What are the nature of electricity there? Do you have 10 hours, 14 hours, 24 hours electricity? Okay. If you're running generator, how much is the cost of diesel? These are cost implications that will make up your strategy in terms of your goals. That's number one. Number two, chasing trends and social media hype. One of the things that happens to most businesses these days is that a lot of folks want to go into what other people are going to. Okay, so you see some people say, oh, look, this particular hair is the trending hair, right? Or this particular telephone is the trending phone. Now you have your own strategy. You deviate from it and you say, okay, well, this is what's on trend now. This is what people are going into. Business strategy, investment demand utmost discipline. You must stick to it. Go back to my previous videos. I keep talking about, see, you cannot be a good investor if you're not disciplined. And that's what the whole summary of this whole conversation is all about. So, social media hype will not help you. It will only aid your failure. Stick to your goal. I'm not saying like, look, you can't invest in whatever. Let what your investment goal is trend for you on the social media. Do not allow other people's social media trend redirect your investment decision. Number three is trying to time the market. So what are we talking about, trying to time the market? Basically what this is talking about is, this has to do with those who are traders, investors, stock traders, right? The rules as a trader, as a young trader, you must have when to get into a particular trade. That's when you get into the market, and then when to go out. That also applies to an investor, right? Especially someone who trades in stock. When do you get into the market? Why am I saying this? Because trading is the same as someone who is a stockbroker or a stock investor. You're technically, in my own view, you're a trader. Why? Because you need to know when to get in and when to go out. But the problem most traders have is the fact that they get carried away, indiscipline. So you say, look, I get in at this point, I'm meant to go out at this point. However, at the point when you're meant to go out, you see that markets continue to go up. And you say, oh, okay, no problem, let me just ride with the trend. By the time that market drops, you'll be shocked at the turn of event. So you need to be disciplined. That's what this number three is talking about. Discipline, know when to get in, know when to get out. So number four, ignoring diversification. You know, we talked about diversification in our previous video, right? And when you ignore diversification, it means that you are kind of like tying yourself to a particular goal. So you say, look, you know what? I want to just invest in real estate. Yeah, real estate is good. The market is moving. But again, as an investor and as an investment person, do you actually depend on one source of investment? Would you actually make as much? There's no investor. I just made reference to some of the big guys in the industry here. None of them invest in a particular goal. You need to diversify. What that does for you is, number one, in terms of profitability and in terms of your resources and income, it helps you. Number two, it helps you to hedge your risk. Because when oil and gas is down, right, banking stock is up. So you're hedging your risk. That's what you guys don't know. That's what these guys do. So, so you have a Dangote who has a refinery, right? So there's Israeli, Iraq, and American war, meaning that movement of vessels affects transportation and delivery of petroleum products, right? Okay, so what does that mean? It means that price of fuel will go up. The same Dangote has invested in sugar. And because there's no much demand in sugar, the price is dropping. So he's losing at that end, but at the same time, because the price of petroleum is going up, he's getting there. So if you want to be a good investment person, an investor, you must diversify. The next thing is investing money you may not need soon. It sounds very funny, but it's very true. I will tie that to long-term investments. I talked about investing short-term, medium-term, and long-term. Long-term is 5 years, 10 years, and above, right? So, and I'm a good student of long-term investment. Things that you think will not happen now will happen in the next future. And so, when you invest long-term, it gives you time to adjust, make mistakes, and at the same time, produce results. So, long-term investment is for funds. In my previous video, I said there are emergency funds. These are the funds that you need for your immediate use, feeding, transportation, and all that, right? Then you have short-term, medium-term, and long-term. So don't forget that I talked about savings. You can as well use your savings for your long-term investment. So for me, long-term investment are for funds that you do not need, but rather than that, those funds just lying there. As an investment banker, I want you to take one thing away as an investor. Think about long-term investment this way. While you're sleeping, your money should be able to work for you. So what does that mean? You put your savings in fixed deposit and you earn, for example, 7%, for example. You invest that savings in a particular company's shares, and that shares stock price is about 23%. So each night you sleep, every night, your money is earning you 23%. Every night, every night, every night. That is why the rich keep getting richer. You know why? Because you cannot be an astute investor keeping money lying fallow. Your money must be able to work for you. And that is why I, Chuka Nwachukwu, I am a great proponent of retail investment. Investment that gives you daily turnover, daily cash flow. Because every day you wake up, you're earning something. Even if it's 1 naira, daily cash flow, you're earning something. So guys, think about this critically. What we do here is to open your eyes, make your informed decisions, and we are here to answer your questions. Most importantly, ensure that your investment advisor advises you well. We are not advising you on what business to go into, but we are just exposing you to different opportunities. So till we meet again next time, this is your investment advisor, Chuka Nwachukwu. Bye-bye for now. Thank you.